All right, all right, all right. Thank you very much, Darrell. Great intro as per usual. Let's do a quick sound check here. Make sure you guys can hear okay. All bueno. All right. So first of all, welcome. These are always fun. Thursday night, tomorrow's Friday. We got a 3-day weekend. One thing I want to do a little different tonight because I have not done this before. We're going to start off tonight with a poll, and we're going to talk about. Let's see, what do you think the market is going to do on Friday? And first choice will be fall like a rock. And let's see. And then the second choice will be short covering, let's see, vicious. Okay, we'll just do short covering rally. And let's send this out. So I've never done this before a webinar, but how this works is that the more of you that participate, the more information we will all have for tomorrow, because I'll share this with everyone. And this is kind of trading intelligence for tomorrow, and they're kind of fascinating for sure. And it could just be choppy, and I probably should have added that. Oh, this is an interesting one. And as you know, we're looking at the charts here. I mean, I think at the very least, we can come up and test the snow line. So maybe we get a snow line test, and then it's a panic sell-off into the weekend. All right, so we've got 625 responses. This one's going to be kind of interesting. I don't know if it's going to be what anybody's expecting. We also want to keep in mind, so you can either look at it as a contrarian play, or we're a group of all very intelligent traders and we know what we're doing. All right, let's post this. Here, I'll take a quick snapshot here. You guys can see it. And now we'll know by the close. So here's a snapshot right here. So as I took this snapshot, there's 673 responses, and 79% say that we're going to have a short covering rally tomorrow, and 21% say we fall like a rock. We all watch the daily video. So I actually do think from I do think from the internals that we're seeing that we are going to see a short covering rally tomorrow. So yeah, so it's but now we can see how this internal poll will relate to the market tomorrow. Yeah, Jenny from the block. I was like, no, okay, but we'll see. So anyway, we'll know obviously a lot more tomorrow. And obviously too, the markets here have had some structural damage. But as I have talked about this week, you know, the way we're set up internally is that this is just very bullish right here. And when this has happened in the past, we rally. When this has happened in the past, we rally. And, you know, it goes on and on and on. So it's really a fascinating thing because visually the charts here look horrible, but the internals are saying that the hedge funds here are duping us, or duping retail into kind of suckering them in here to be scared. So anyway, you got to love Wall Street. Let's minimize that. So what we want to talk about here, shorting everything. So what we're going to talk about is the new and improved squeeze system. And this is not something I'd ever thought would come out of my mouth, but we'll just, because I've been using the squeeze for a long time, but we'll dive into that. And really the moral of this is that we don't know what we're missing until we find out what we're missing. That actually sounds like a song of regret. And in a way it is, which I'll talk about. But then when you know what you have, it can make you appreciate it even more. So, yeah, it is 2019, isn't it? That's kind of funny. Let's go ahead and change that so we're not all confused. Perfect. Thank you. And let's go present this. Out with the old hotness. Okay, so let's dive in and kind of take a look at this. So real quick, many of you know the story, some of you don't, so I'm just going to tell the story real quick to kind of give you just kind of an idea of kind of how I view trading. And this was a long time ago. This was in the 90s, but I had a job in out of college. I was working in Austin, Texas, and then I got recruited and a promotion up to Minnesota. And this was in January. Gosh, January, I think I want to say it was 96 or 97. I don't remember exactly. So my fiance at the time, who, by the way, my fiance, I met her in college, and I was sitting there, we were talking one night, and she said something how she had $20,000 in student loan money that she didn't know what to do with. It was sitting there in her account. And I was like, hey, babe, want to let me trade it? And so I took her money and I put it into a stock called iOmega. The stock tripled and her $20,000 went to $60,000. I mean, I kept some of it, but then, you know, she got, I think I gave her back $45,000. That story could have ended horribly wrong, but it worked out pretty good. And at this point, after college, when I got this promotion to go to Minnesota, I said, well, why don't you come with me? And, you know, at that point, she had a little faith in me, so she came with me. So, oh no, this was horrible. So she had never seen snow before in her life. We're living in Minnesota. It's January. It's winter. All of our cars from Texas just died. And at this point, I'd been, you know, I did my first trading as a senior in high school. And at this point, I'd been at it for about 7 years. And I had reached a point, and again, this is kind of the condensed version of the story, where I had built up a $150,000 trading account. And this was my third attempt. So I went from 10K to 100K. Well, actually about 130K. And at that point, I would do a very smart thing and then a very stupid thing. Okay. The smart thing I would do is I would take out about 30K and put it into rental real estate. All right. And then I would sit there with that 100K and say, okay, if I took 10K to 100K, now I'm going to take 100K to $1 million. All right. And the first time I tried that, it's like 8 weeks later, I was back to 10K. I was like, oh man, I wonder what happened. And so I tried it again. And after about 6 or 8 months, I'd run it up to about 130K. And I took 30K and I put it into rental real estate. And then I took my remaining 100K and was like, all right, let's try it again. And I crashed it again. So at this point, I got to 150K. And instead of sitting there going like, all right, I'm going to turn this into $1 million, I was like, you know what? I just want to make like, can I just make like 3K to 4K a week and then quit my job because I was still working full time. So that became my entire goal. So as I was getting to the point where I was getting close to quitting my job and trading full time, Maria, my fiance and now wife, said, hey, I am stuck in this apartment. The snow is killing me. Like she was resanding the walls like every other week. She's like, look, I love you and everything, but I'm going back to Austin unless we buy a house. So we found a house that we liked. And the key is that it like had a heated covered garage. Okay. That was the main thing. So we got the house, set up a closing date, and basically we're going to need $30,000 for the down payment. And we told the bankers that $30,000 was going to come from my trading account. Okay. Because what I was doing with the money that I was wiring out every week is I was buying rare coins, like gold coins and things like that. And those are things that you have to hold for 5 or 10 years in order to make money from them, because the bid ask on those things is pretty wide. And I did have my rental real estate, and that was great, but my cash source was my trading account. So about a week before closing, I had this, I just caught off my mic there. About a week before closing, I had this great idea. And that idea went like this. And I really actually thought it was incredibly smart. I was sitting there going like, you know what? I've got a $150,000 account. I had blown up 2 other accounts, and so I was nervous about that. And I had gotten into a nice groove, okay? And you know how important that is as a trader. When you get into that nice groove, you're confident, you're not trying to overcompensate or anything like that. You're just in a nice groove. And my concern is that if I took 30K out and dropped it to 120K, I knew psychologically that I'd be trying to build it back up to 150K again before I'd start wiring profits out. And I was like, man, that's probably going to mess with me a little bit. And that was making me a little bit nervous. So I said, you know what? I'm just going to do like a really big trade and then try to make 30K. So my account will be 180K, so that when I wire out the 30K, I'll be at my comfortable 150K. We'll close on the house. I'll quit my job and we'll live happily ever after. So that was my plan. So the next day, I put on the coffee, studied the charts. I traded OEX options a lot then, and the OEX had been dropping and was starting to rally back up to a trend line. And I was like, oh my gosh, this is great. So I bought 100 OEX puts at 750. The market immediately started to fall. Toward the close, it kind of popped back up. And I was like, man, this is amazing. So I went ahead and bought 100 more. And I had my entire account in this trade. And as it rolled over into the close, I was already up $12,000 at the close. I was like, man, I'll never do this again, because I know how stupid it is to bet it all in one trade. But boy, this is going to work out really, really good. So what happened was the next morning, the Dow gapped up 150 points, and it gapped up, traded sideways, and rallied into the close. And over the next 4 days, it did the same thing. And in fact, as long as I've been trading, I don't remember seeing that strong of an uptrend, I don't think, in my life. Well, what happened was I was literally a deer in the headlights. The day before closing, I was like, oh my God, I have got to close everything out because I got to buy a house. And my $150,000 account at that point, when I sold everything, had dropped to $8,500. And obviously I was mortified and I was terrified, and because I was sure as hell not going to tell my fiance what just happened. I went to the bank, I maxed out all my credit cards, got advances, got the money in my account, went to the closing the next day, and there was a little bit of a weird time there when they're like, well, we thought the money was coming from your investment account, but, we need to see this, and I just played dumb, and we got through it. And then after that, I dropped her off, and I just went and I threw up for about half an hour. So it was a very, very painful process, and I didn't really trade for the next 6 months. But I came across a book by Mark Douglas during this time called The Disciplined Trader. And that really opened my eyes and changed my life. And from there, I went and worked with some mentors. And the long and short of it is that I found is that when I focused on the money, I naturally did the things that caused me to lose money. However, when I just focused on the setup, okay, the money took care of itself. And from that day on, that's what I've always been focused on, is just focusing on the setup and then letting the profits take care of themselves. All right. And so it's in that spirit that we take a look at the squeeze. And the other thing about trading is I incorporate it into my entire life. There is no separation for me between personal life and trading and being in the office. It's just life. And so, I try to incorporate my kids in everything we do. This is an event we did in Africa with Richard Branson. Here, we had a fun little chat there with some of you guys may recognize him. I actually like to trade with my dog. I mean, that's just, and here's Dylan. He's heard me talk about trading so much. He's like, Dad, kill me. I don't want to hear this again. But that's just what it is. So now we get to the squeeze. So I love squeezes. If you followed me for any length of time, you will know that the squeeze is something that I've been doing forever. And it's my favorite trade. Any trades that I do incorporate the squeeze. And what they do is they help identify the times in the market where it is about to enter into a focused, concentrated, greater than expected move. Okay, and we'll talk more about that, what that means, but it's super important. The reality of it is that 80% of the time, the markets are just kind of chopping around and they're chewing people up and spitting them out. The squeeze helps to pinpoint that 20% of the time for solid profits. I've learned to basically stay away from a market if there is not a squeeze. So as an example, this is kind of a textbook setup for those of you that have seen this. This is one we did in the room, I think towards the end of last year. Here's a squeeze. We get our buy signal. We buy some options. That turned into a $23,000 trade. But you'll notice here, I didn't do anything during this, okay? I waited for a squeeze to help give me an edge of a focused move that I could use to take advantage of options. So I love the squeeze. And so the question is there is there something better? Okay. And the squeeze is something, gosh, came with it. It was a long time ago that we came up with it. And it's actually even built into, if you go over to Thinkorswim and just go to edit studies or add a study, and you'll see here it says, oh, John Carter study. There's not a lot of people that have their studies on Thinkorswim. And then you'll see here, oh, TTM squeeze. All right. And so this is something that was, it's been using it forever. And so the question really just kind of came down, is there something better? Because it's my favorite tool, but I was just wondering, like, all right, am I missing out on something by having not really hardcore tested this out? Okay. And so squeezes are great for these home runs, and they add nice quantities of capital to your account. They have not every squeeze is going to work, but they've got a 75% plus win rate. And not every squeeze is a grand slam home run, but it is the most consistent strategy I've found for base hits and potential home runs. All right. Here's the issue. The issue is that the big squeezes, for example, on the daily charts and above, they just don't happen very much. Okay. And this is what got me to thinking, is that maybe there's a better signal. Maybe there's something that's faster. Maybe there's something that's more accurate. All right. And so before we get into that, though, let's take a few steps back. Yeah, I totally agree, David. The squeeze in conjunction with the multiple time frame analysis tool is amazing. So let's just kind of take a step back here. So here's a chart of Momo. Okay, if you guys are familiar with this, we traded this a lot last year when it was kind of the hot stock of the day. And what you'll notice here, and just keep an eye on this. So you're going to have these movements here, and it's just like, you're popping up, and then you're coming back, and you got these big explosions, and then you just chop, 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 chop. Remember, 80% of the time, even though the stock is in an uptrend here, most of the time it's just chopping around. Okay, most of the time it's just chopping around, literally chewing everybody to hamburger. And if you're not aware of that, all right, it can hurt quite a bit. And so what we found is over time is that the highest probability entries actually occurred when the Bollinger Bands were near their peak contraction. Okay. And conversely, the worst, absolute worst entries would happen was when the Bollinger Bands were at their peak expansion. Okay. And what this led to is this whole journey of the squeeze going like, all right, if that's the case, how do we narrow this down? Because without that, what happens is we get sucked into the noise. Okay. And if you look at this here, literally, if you walk into the market and you don't have a plan, the markets are wired to trip you up so that you automatically do this. Okay. Here's the trade. Wow, I really like it. I'm going to buy it. I'm feeling on top of the world. I always say, beware of euphoria. Euphoria is typically, because if you're feeling euphoric, everybody else is too. And if everybody's euphoric, it means everybody's long. And if everybody's long, there's no one else left to buy. And as it comes down, anxiety, denial, it's like at this point, it's like, gosh, if it just gets back to where it was, I'll get out. And then fear and panic and capitulation. Okay. And remember, that's the highest potential for earnings as well. And if we go back here and we look at Momo, you can see here how this would play out, where people get excited and say, man, I really got to get some of this. It looks great. And then they have, depression, anxiety, despondence, right? Oh my God, this looks great. Depression, oh my God, this looks great. Depression. So, and then here, if you buy it, and if you buy options here, you're just literally for a month, it's going nowhere. Like that's literally getting chopped up. And so what happens then is that the awesome thing about this is that when the Bollinger Bands contract, this represents a compression of volatility. This means that the stock just got really quiet. And the key with this is that it can only stay quiet for so long. It's literally building up energy, getting ready to pop higher or implode lower once the Bollinger Bands stop contracting and start their expansion phase again. And this gives us a huge advantage in terms of timing. 80% of the time, market movement is random and lacking conviction. There is no reason to risk your cash unless the odds are strongly in your favor. Okay, so that's great and all, but what is the key problem here? The key problem is how narrow do the Bollinger Bands have to get in order to be a legitimate high probability signal? Okay, and when you do get a signal, how do you know when to get in? right? This is one of the most common questions I get. How do I know when to get in, right? And how do I know if the stock's going to go higher or lower once it starts to make its move? Huge questions there. And last but not least, once you are in, how long do you stay in? How can you tell when the Bollinger Bands start to contract, which means that you should get out, okay? So most of you, I think, are familiar with the squeeze. So here's the standard squeeze. If you're not, I'll give you a quick 10 seconds on how it works. So here's noise, noise, noise. Now, these one dot squeeze, I'm not a huge fan of, but it's still legitimate. But basically, if you sit there and say, oh, here's a squeeze, great. Let's go with a more standard one here, though. Typically, though, I like to look and see if there's at least 5 dots. Okay, that's telling me that it's building up. And then I can buy it near the 21-period moving average. If the momentum's above 0, I'm going long, and I can stay in until it loses momentum. So through all this chop, I come in and do wham, bam, thank you, ma'am, and take my money and go. And I wait, I stay out of this, I stay out of this, I stay out of this, I stay out of this. Another squeeze, 5 dots, momentum's above 0. I'm getting long at the 21 moving average. Boom. Okay, and you sell into that. And that's it. And that's it. And you just kind of ignore the rest of it. And so it's kind of nice, right? And so this is an example. And you can do, a lot of times people ask like, well, what can you trade on this? And you literally can trade anything. I've traded Bitcoin with the squeeze. In this case, I'm showing this example because I'm trading the stock. I like the number 7. So I had 7,777 shares of stock, which obviously at $40 a share, that represents a lot of money. But the nice thing is here, 100 contracts represents 10,000 shares, and that was way cheaper. That's the power of leverage. So anyway, that turned into a solid trade. I mean, that was obviously a bigger trade, but it's okay to do one lots and stuff like that as well. So here's what it came down to. Yeah, you can totally do this on Bitcoin as well. It works great on the cryptos. So here's where the rubber meets the road, guys and gals. On this weekly chart of the spiders, all right, as you can see here, this is like a week old. There are 2 solid squeeze signals. My question was, with improved settings, could we have seen more moves developing in time to catch them versus seeing them after the fact? For example, this looks like a good move here, right? And this looks like a good move there. And this looks like a good move there, okay? But there's no squeeze here. There's no squeeze here. There's no squeeze here. Now, granted, this was a great move. I'm not complaining. And this was a great move. I'm not complaining. But what my question came down to is that can the squeeze be developed to an upgraded version where it could actually capture these obvious movements that we're seeing, okay? And we're seeing some compression, but for some reason, the regular squeeze just couldn't catch it, okay? So what we looked at here was just essentially upgrading it. Now, if you'll notice this, here's the same chart, and here is the regular squeeze, all right? And here is updated. So you'll notice a couple of things. First of all, right here, while there is nothing to catch this little blip, wait, hey, here's a squeeze right there. While there is nothing to catch this amazing move, the updated squeeze nailed it, okay? You'll notice here that it moved, but what's nice here is that this is giving you a heads up. Hey, get ready, get ready, get ready, boom. Beautiful move here. Current squeeze is nowhere to be found, but the new one is all over it, all right? And so this started to get me excited about the potential for this. So if we look at this in more detail now, we can see that it's giving us not only there's a couple different things going on here, okay? First of all, for a regular squeeze, it will often give you a heads up, okay? This is one thing that I love about it. For a regular squeeze, it'll often give you a heads up. But more importantly, there are plenty of times when the regular squeeze doesn't register that the new one, the professional version, does, okay? Beautiful move there. Now, again, regular squeeze caught this one, but this one is telling us, hey, get ready, get ready, get ready, get ready. And then when they sync up, that can become pretty powerful. And then finally, right here, beautiful move, nothing to be found there. All right, so this got to me to be very, very exciting. Now, check this out. This is something I almost honestly couldn't believe it when I saw it. Really couldn't believe it. So here's XLI. XLI can be, pretty volatile, very economic sensitive. All right, here's a nice move higher, no squeeze. Here's a nice move higher, there's a squeeze, 2 dots, right? But there's a squeeze, huge move lower, 1 dot squeeze. I mean, 1 dot squeezes I have a problem with because I just miss them. I'm not looking at every chart every day. That's why I like 5 dot squeezes, because it's like, oh, you get a chance to see it and watch it and develop it. Here's another great move. No love here, right? So that's the kind of stuff where it's like, well, what would happen if this, we could update this. And so if we look at this and say, okay, well, if we add the updated version here, we can see, bam, catches that move. Now, here, yes, there's 2 dots there, but it's giving you a heads up. Get ready, get ready, get ready. There's more time, okay? Right here, 1 dot. Oh, we're all going to miss that one, but it's like it's giving you heads up, heads up, heads up. No love here at all. Beautiful, beautiful setup, okay? So that got me excited. And that's the kind of stuff where it's like, okay, it's just, I want to be able to catch the concentrated moves. That's really what it comes down to with the squeeze. I want to catch the concentrated moves. I don't see any reason to miss the concentrated moves. But if I've got a squeeze that's not really registering anything, right? If I've got a squeeze that's just kind of missing the moves, now don't get me wrong, it's catching some pretty solid ones. But if it's missing a lot of the moves, it's just kind of like, well, what's going on here? I mean, this is a good move down, but if I'm looking at this, I'm not catching it. That's a good move here, but if I'm looking at this, I'm not catching it. And so that's really what it came down to, is I'm sitting at the plate with my bat. I want some pitches. I want to take a swing, but I've got to be able to see the ball. So to me, this was a great find. Super, super excited about this. And as I was playing around with this, and I also wondered, okay, are there rare instances we should know about so we can be prepared for the few times that they occur? I mean, it's great that this updated squeeze gave us more at bats at the plate, but was there also a version of it that was more rare that we would also want to be aware of? Like when the volatility gets so compressed that it rarely reaches that level. So when it does, it has a lot of energy to release. So here's a weekly chart of the NASDAQ. And now you can see we've got the regular squeeze on top and the version we were just talking about on the bottom, and then what is called the super tight one in the middle. You'll notice here there's only 1 dot here. But typically, even if this one shows up with 1 dot, you're going to get a more powerful, steadier move, okay? Here you get a little bit longer of a heads up. Here you get a little bit longer of a heads up. Here, again, cleaner, kind of a heads up. And here, there's no signal except the updated signal. All right, so just those together just kind of work really well. Here's an example of Shopify. This is one. This is one also too that we like, and you can see here that yes, right here there was a nice move, and the new setting is the only one that caught it. But what was really intriguing here is that here's the normal squeeze. Here's this one giving us a heads up, and wow, that one's coming up. That means this sucker must be getting ready to explode, and explode it does. So this one became really, really interesting because it's like, man, when that happens, I mean, I could buy some out of the money calls because basically I'm looking for an even bigger move. All right. Somebody was just asking, does this work intraday? And it works great intraday. I actually love it on the NASDAQ futures as well. And obviously, if so go the futures, so go many of your stocks. You can see here's a 30-minute chart, and here's our normal squeeze. All right. We got our updated squeeze, which actually kicked in a little bit earlier, but then we got the mega squeeze, and you can see the resulting explosion there. So that's pretty good that way. So key problem. Long story short, I love the upgraded Pro version. What I don't love
Hey, yeah, don't don't worry. It's definitely not you. It looks like John might have had a Chrome hiccup. You're screen sharing. Where's the webcam? All right, no worries, y'all. I believe everything is okay. It looks like John's sharing his screen again, so I'll go ahead and mute here. But rest assured, it's not your speakers. So it's perfect timing. What I don't love. Oh, that's awesome, Grant. There is absolutely no accidents in this world, are there? All right, y'all, I'm going to mute my mic again. I believe John is ready to go. Just in case I can hop back in. You time for a Don Julio break. Oh, Richard McKinney, you are a genius. All right, I think we're good. I'm muting my mic here.
That was pretty awesome. We'll see if the second time is a charm here. Yeah, I think my computer decided to restart. Perfect. Okay, great. All right, let's see, where were we now? Oh, here we go. Yes, we were talking about the squeeze. So what we did here then was we took all three of these. Okay, so we've got the regular one, the superpower one, and kind of the more sensitive one, and then just combined it into the Squeeze Pro. Okay, and you'll see on here there'll be black dots and red dots, and then when the orange dots show up, they'll be there as well. So now you can kind of see all of that into one slide. All right, can you guys see slide number 27? That's the one I'm on right now. Guess we should double back. Slide 27. Yep. Okay, fantastic. Yeah, never a dull moment with technology for sure. So right now the slide I'm showing is PAYC, and we're looking at the Squeeze versus the Squeeze Pro on PAYC. Okay, fantastic. So, so if we look at this, yeah, Mercury in retrograde, awesome. So, yeah, no, it's a good question here because I know a lot of times, there's trades that we'll miss and we're trying to like, okay, FOMO, fear of missing out, and instead focusing on JOMO, which is the joy of missing out because you're fully aware that you're not being a slave to your dopamine hits by succumbing to FOMO. But what's nice about this is that instead of just watching these moves go without you, okay, no signal, boom, you get a signal. Okay, watching the move go without you because no signal, boom, you're getting a signal. Boom, you're getting a signal. And so by combining this, you'll be able to see them working together like that. So that's something that I really, really like. Oh, good. Okay, Jerry. So Jerry just says she restarted it and now she's synced up with the slides. So it sounds like there's a couple of you that may, if you just restart it like that, it'll sync back up. But yeah, it looks like a little bit of a North Korea was trying to infiltrate the internet here and it kind of reset everything. Okay, here's an example of Chipotle's. And now you can see them all combined into one. So if you look at this, you'll see here, so when there's red dots, the red dots will overlay the black dots. So first of all, you had a lot of heads up, boom, okay? Here, the only signal that came up was that new one. And then here you had a kind of a combination, which are powerful. Here you can see there's all three, black dots, red dots, and orange dots, super powerful, okay? And you can see the big puke that the stock had there, all right? A little bit of a combo one there. And then, of course, that one was setting up as well. So it's really nice just how it works together like that. And here's another example of Honeywell. And so with this ability to see all three settings, you got a couple of things going for you here. One, you can easily catch moves that wouldn't have shown up as a signal with just the old squeeze. That's obviously very, very important here because you're getting more swings at the plate. You're getting more at bats. But next, you also get an early warning that an old squeeze may be about to appear, okay? So for example, right here, you get early warning, oh, there's the squeeze, okay? Little bit of an early warning, there's the squeeze. But then in other cases, it's the only signal you're going to get, boom. Only signal you're going to get, boom. Only signal you're going to get, blah, right? Only signal, more at bats, more at bats. And then the combo ones are also solid. So that's what's pretty solid there. All right, so that's really awesome, right? So first of all, love, love, love those new settings. But as I was talking to Eric about this, because I even see a couple of questions right now centered around the idea of how do I know if it's going to go long or short, and when ideally should I get in? So that's what we're talking about in terms of a system to apply to the squeeze. So I really liked how this looked, how easy it is to view at a glance, and how it opens the door to not only more signals, but those higher quality signals. So it not only catches moves the regular squeeze misses, it also helps to clean up confusing signals like one dot regular squeezes. All right, so that was huge. But I had to bug Eric a bit. Can't we do more? Like make it visually apparent on a chart when there's a safe opportunity to get in early before the entry signal triggers. Eric sighed. He's like, yes, John, I think so. I was like, awesome. So I went to bed, and as per usual, Eric worked on this. I think he gets up at 4 o'clock in the morning, military habit, and he knocked it out by the time I woke up. So, so what happens here then is the signals. All right. So not only is there a squeeze here, but it's telling you, hey, it's safe to buy here. Okay. Not only is there a squeeze here, but it's telling you it's safe to short here, right? Not only is there a squeeze here, it's safe to buy here. Not only is there a squeeze here, it's safe to buy here, okay? Now, typically, I like to see at least 5 dots. So on this one, although we saw it, it didn't generate an arrow simply because of the settings. And so, there's a couple different ways to set that up, but we'll, spend some time certainly talking about that as well. So, this is another one that we recently did, and boom, I love that, the name of that symbol. Great squeeze here. It was a 1 dot red squeeze. Like, who cares? But you can see here, new signal, new signal, new signal, safe entry. Okay. Here you can see we had all 3 coming together. So guess what? We had 3 buy signals. All right. So, and those don't happen in hindsight, they happen in real time. And so that was something I was really excited about, is being able to take what's just kind of the squeeze, which is a great indicator in and of itself, and not only improving the hell out of it, but then adding specific buy entry signals to it for both longs and shorts to make it visually easier through all the noise that everybody's going to see on any given trading day to make a decision. So, although the daily chart is my go-to chart, the signals were great on other time frames as well. So here's a Google daily chart. Yes, I love the daily chart. It's kind of my go-to. Short signal, long, 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 right? Boom, 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 boom. But of course, I do like to trade other time frames. Now, one of the most important time frames to keep in mind is the monthly chart. Guess what? All the key monthly charts right now are forming new squeezes. These are going to drive the next year or so. Example here, huge squeeze here, boom, again, monthly chart. Now, this move here, there was no regular squeeze, but the new squeeze caught it. This move here, no regular squeeze, but the new squeeze caught it. Now, this move here, huge triple squeeze action, right? All 3 settings, boom. Guess what? There's another one setting right now. The new squeeze is nowhere to be found, but the new one is setting up. All right, we're consolidating here for a new huge move. Here's IWM, weekly chart, okay? Again, if we're looking at this going like, oh my gosh, 2 sell signals here, great. Buy signals here, awesome. Buy signals here. Awesome. Now we didn't get the arrows here because it was only 4 dots, but visually that's very clear to see if we wanted to go ahead and take that as well. And then here's a 5-minute chart of the S&Ps. Now, if you do like to day trade, and I'm not a huge fan of scalping, but there's nothing wrong with 1 or 2 day trades a day, especially using futures. All right, squeeze, sell, squeeze, sell, squeeze, buy, squeeze, sell, squeeze, buy. These are pretty solid signals. You just kind of go with the flow. So I like that as well. So it's really, really solid there. So basically a new and improved squeeze strategy. So I told Eric I was very happy with this and that it was a job well done. Though I'll tell you, I was appalled at my collective lost profits over the years not having this. I'm going to talk more about this, but I went back and started figuring out how many signals I'd missed over the years because I didn't have this, and I was slightly horrified. But at the end of the day, this combination created a great new and updated trading strategy and system that would improve my trading right away. All right. So then, unfortunately, I went to bed. I started thinking about all that. And I woke up the next morning and said, Eric, I love what you've done, but we got to add more to this. If we're going to release a complete system and strategy around the squeeze, we got to have more. Okay. So I gave Eric a call. I think that's exactly anytime I call him, he's like, oh, dear God. I told him what I wanted. And he said, John, that's 2 more things. I think that's too much. But if you really want to see it. So a few years ago, we created a tool called the early in and out. Some of you may know it. So the first thing I said is like, look, you need to rip the guts out of that. And you need to update that for this. Okay. And so how this works, which is really nice, is that what will happen is you can see the squeeze, but then when it's about to fire, it'll get you an alert. So you can see those 2 bars there. These happened while there were still dots. And that was telling you, I call this fixing to go. All right. So you got the short arrow here. And if for some reason you're hesitating, this is saying, hurry up. It is fixing to go. Okay. Same thing over here. Hey, there's a buy arrow. Are you waiting? Are you waiting? It's getting ready. It's getting ready. It's getting ready to go. So it's kind of screaming at you like, look, not only do you got to squeeze, not only you got an entry signal, but the squeeze is about to fire, because even though you can actually make consistent money buying here, the whole goal is if you can get in before, especially when you're trading options, you can typically double the amount of profit that you can make on the trade. Well, I get excited about this stuff. Yeah. So, I mean, look, I wouldn't, if I didn't get excited about this stuff, right, I wouldn't look at it. And it's great talking to you guys, because if I'm talking to my wife about this, she's like, dear God, please shut up. I don't care about the squeeze. I love that you're passionate about it. So we have a code word when she's talking about decorating, and literally my brain starts to hurt when she starts talking about decorating, like the color of the drapes. So the code word we have is, if I'm talking enthusiastically about trading, she can tell me drapes, and that's code word for I love you, and I really don't care what you're saying. Conversely, I can say the same thing to her. So it's great talking to you guys, because I know most of you guys are usually pretty enthusiastic about any kind of a trading tool that will continue to increase your edge. Okay, so here's a 7 to 8 minute chart. And again, you can kind of see how this system is coming together, right? So on the 7 to 8 minute chart, you got the squeezes, you got the buy signals, you got, hey, hurry up. If you are not going to get in, you're going to miss the train. Squeezes, you got the signals, hey, short. And then if you haven't done it yet, you better hurry, because it's fitting to go. And there it goes. So all in all, I was like, all right, this is kind of a nice visual and nice kind of easy thing to follow. Here's McDonald's. Again, same thing here. So you got the signal, you got the arrow, and fitting to go. All right. You got the signal, you got the short arrows, fitting to go if you're not already in. Fitting to go, et cetera, et cetera. So again, very, very kind of a consistent thing with this. Derek, you use the early in and out with this new squeeze. Yeah, so Derek, what Eric did with this is he modified the old early in and out to match the signals of this. So now it all kind of works together. So the second part though, so that early in and out has actually got a couple different things. And I don't talk a lot about the momentum shifts. Okay, but what's cool about this is these bars, if you notice the bar colors, they're basically meant to match the momentum. So you can sit there and say, oh, a light blue bar means that momentum is above zero and rising, but a dark blue bar means that momentum is above zero and falling. And a red bar is below zero and falling, whereas yellow is above zero, below zero and rising. So you can actually play these shifts. So here's the start of a shift, and here's the end of a shift. And you can actually play that rotation. You can see if you shorted that and then got out, right? Well, what's nice about these bars is that the early in and out not only tells you that a squeeze is about to fire, but it also tries to pinpoint when the momentum's about to shift, meaning that you can get out earlier. So in this case, you get in here, you can see that the squeeze is about to fire, you're riding along, and ideally you're taking profits as you go, but when the momentum, my official strategy with the squeeze is that when you have two momentum bars, okay? When you get two momentum bars in a row that lose momentum, you get out on the third bar, okay? But however, what I do now with early in and out is that if the bar changes, okay, that's telling me that the momentum bars are about to change, so I'm just gonna get out. So entry, exit. That's new exit. Old exit is right here, where you're already giving back some profits, okay? Here, you get a squeeze, you're short, going. Now, you can see that the momentum here is turning yellow while it's still red. This is telling you heads up, this is about to turn. And you can see that if you had waited for the two momentum bars here, you'd have got out here, which would have been, you know, again, it was a daily chart. So it's like a week or two of suffering when this is saying, look, get out here. You've already made your money. So yeah, it's pretty sweet. I mean, this is the kind of stuff that I like. Here's a 2-hour chart of the S&Ps, okay? So again, as you're looking at this, short signal, you're sitting there, you're wondering what's gonna happen. Oh, it's fixing to go, I'm already short, boom. Now, look at this. You get the yellow bar here telling you, hey, get out now, okay? And you can see from here, it just explodes, and if you had waited for that, you'd have been getting out up here. So it's telling you that it's the momentum's about to change. So it's kind of like foreshadowing what's about to happen. So buy, fit and go, we go. Momentum, you can see here that momentum changes here on the bar to dark blue. We're still light blue here, get out. Because if you wait, you're gonna give back, in this case, 20 points of profit on the S&P futures. Yeah, SP totally 5-minute. Yeah, we were looking at some examples of the 5-minute as well. So very solid, very helpful. So the second part I asked Eric about was the statistics. All right, now I wanted to see some backtesting history at a glance. Give me some data on the squeeze I can sink my teeth into so I can make a more informed decision and also plan my exit with realistic and high probability expectations. All right, so now here is what he came back with on this. Okay, this was his first pass. And all of a sudden I'm like, oh my God, this is amazing because I can see here at a glance, I can actually get a really solid glimpse of how well the squeeze works on a particular time frame for however long I've got it on here. So this is a daily chart, 20 years on the spiders, and I can see at a glance that the normal squeeze had 122 instances with 71 long squeezes and 51 short squeezes. The average squeeze length was 6 dots, okay? The average post-squeeze run was 5 dots, with the longest being 14. But here is the kicker. The average post-squeeze move was 1.62% or $4.62. Yes, the biggest one was huge, but this is the money right here. That's the money shot, all right? I can get in and say, wow, I know with a pretty good certainty that I could probably make $4.64 on the spiders, all right? So if you're buying options, that's a double, right? And so that was something where it's like, okay, that's great, but Eric, I need to know also for the new settings. Like, that's great because that's for the old squeeze, right? Which is great, but I need to know what the other ones are too. And he's like, oh my gosh, okay, you're killing me, dude. So he tried a couple different renditions. It was a total cluster. And this is what it looked like. So I was like, oh, I mean, look, I appreciate this because I can see all the settings here. So I can see that with the low setting over 5 years, there were 46 squeezes, okay? And the regular setting, there was only 31, Okay. And of course, the real tight one, there's only 5. But this was just, I mean, that's an eyesore, right? And I was just like, okay, Eric, look, it's great, but we got to make this easier. All right. We got to make this easier to see. He gets combat. So the good news is I think, Eric used to fly airplanes over Afghanistan. So I think that trained him well for this. He's like, oh my gosh, I got another call from John. So now here's what he did. And he kind of cleaned it up a little bit. So if you want the details, you can throw them down here a little bit more organized. Okay. But if you just want the meat, you can have a summary up here. So I kind of like both. But as you can see here, it's like, okay, all right, here's a black dot squeeze. Okay. That's the low setting. I know that over 5 years, there have been 21 long squeezes, 25 short squeezes with the average move of $4.31. Okay. Oh, here's a red one. I know here that there have been over 5 years, 18 long squeezes and 13 short squeezes with an average of $4.41. All right. And so now all of a sudden I got to dive into this and really start to plan this out a lot better. So, I mean, because you want to plan, like, the idea of a squeeze is like you want to be open to all possibilities because the market can do anything, right? But at the end of the day, we just want to make the highest probability amount of money that we can. And this is saying, look, if you get $4.31, take your money and run. At least take some off the table, because on average, that's what the squeeze does. So if we look here at Google and to say, okay, great, here's Google. Now I can go back and say on the daily chart over 20 years, on this low setting, there have been 80 long squeezes and 51 short squeezes, and the average move has been $42.88, right? That's good data. On the normal setting, there have been 47 short squeezes and 47 long squeezes, 34. Now, what you're going to notice here, and this is where I started getting kind of sad, because I started realizing how much money I'd lost over the years by not having the signals, basically on moves that I wasn't able to participate in, which we'll talk about here. But it's actually good having that in terms of planning. Very possible. Yeah, very possible, Bob. So here's a 2-hour chart of the NASDAQ. Okay, so 2-hour chart of the NASDAQ, and with kind of the system in place. So we can sit there and say, like, okay, so here's a squeeze setting up. We got the sell signal, and this is on the low and mid setting. We can see that the average black setting is 47 points. The average red setting is 68 points. Okay, so we can kind of see that. Or it's like, okay, here's a squeeze here, and you can see, great, here's a squeeze. Here's the squeeze setting up, great. Here's a squeeze setting up, fantastic. And so what's great about this, though, is it's, now you got all this. You got the momentum shifts. You've got the early warning. Get in, it's going to go. Get in, it's going to go. Get in. If you're not in, it's going to go. And you've got the statistics. So now, instead of merely an indicator at the bottom of a chart, it's a whole kind of strategy. It's a whole kind of a package that you can sit there and utilize on whatever market and whatever time frame you like to trade. Forex, 5-minute chart, great. Futures, stocks, swing trading, position trading, et cetera, et cetera. So this one is on the spiders here, and this kind of shows us on a 2-hour chart over 360 days, over the last year. We can see and sit there and go, okay, great. Here was a squeeze that set up. Here was the arrow to get in early before it fired. Now, in case we were dawdling, this is telling us, hey, it's fixing to go, so you might as well get in. Great. We can get out on the momentum change, but at the same time, we can also see that the average move was $2.48. So we're going to say, okay, let's just get our $2.48 and get out. Same thing here. Okay, same thing here. And another one that had set up there. And so what's great about that, and then if we want to dive in longer, we can say, what was the biggest move, right? What was the average post-squeeze run? Okay, 6 bars here, 7 bars here, 14 bars here. So it gives us just a lot of information to plan with, which is great. We are playing around with scans for sure, and we want to get those integrated in. Now, for those of you that recently took the small lot class, so the small lot class, obviously, that's fine on its own. You can, if you're intrigued by this, you can certainly incorporate the new squeeze pro into this. And now you can see it's kind of like, okay, we've come back to the mean. And by the way, here's a buy signal. Okay. And if you're not in it, it's fixing to go, right? And we actually did this recently. Here was the squeeze. We got the buy signal, right? And we can see here, it's like, okay, well, the average move on this is about $1.64. So, we're not expecting some huge thing, but a nice steady mover there. And so it does actually incorporate really, really well with all of the small lot tools. The small lot tools by themselves are great, but this mixes in very nice. So amazing info. How does it work with all the other stuff? So the main thing here is that I would say that the Squeeze Pro with the buy sell signals. So if you've used the Squeeze before, the updated Squeeze Pro with those buy and sell arrows is a complete simple strategy that you can utilize kind of anywhere that you use the Squeeze. If you want the early in and out and the stats, that's great. That's, that's kind of more stuff. But those two by themselves are very, very solid. Okay. Yeah, you know what? I like that idea too. Just to seeing which, in terms of which ones, yeah, how they like played out like that too. So, okay, so we already covered that one. So in summary, long story short, I love the new settings. It turns the regular squeeze from a solid indicator into an improved, souped up signal and complete trading system that works on any market on any time frame. So is it for everyone? Well, I love this. And so I just say, like, look, if what you're doing right now is working, keep doing what you're doing. Okay. Oftentimes when something isn't working, it's because we're fighting the market. And I love this quote by Mark Douglas. And Mark, he was so insightful about this stuff. And he just says, consistent losers do almost everything to avoid accepting the reality. No matter how good a trade looks, it could lose. Okay. Consistent losers do almost everything to avoid accepting the reality that no matter how good a trade looks, it could lose. And what I like about something like this is that it really visually can disassociate yourself from the markets, because literally you're just following along for the ride. You're not trying to impose your will on the market. Okay. There's no squeeze, there's no trade, right? So that's what I love about this, is that visually it helps a trader protect themselves from themselves. Save yourself from yourself. The markets are designed specifically to manipulate our minds and get us to chase moves when they're about to end, okay, and to hold on to losing positions too long. They're designed to do that. So the key to combat this is to have a system or strategy with clear entry and exit points, so you will know when it is safe to get in, know when it is too late to get in, i.e. don't chase. The thing that dogs that chase cars all have in common is eventually they get run over, okay? And most importantly, know when to get out. So if you guys have been around with us for a while, on January 14th and 15th of 2014, I did a $1 million day trade in Tesla using the squeeze and loading up obviously on a lot of contracts. And now, don't get me wrong, those trades are fun, but they're highly emotional. Like, I couldn't sleep that night. And once in a while, that's okay. That's real fear on my face, by the way, at the stratosphere. What I want to do something simple. Like, it's consistent, it's simple. I can do it from my cell phone. I don't want to be up at night worried about trades that are too big. Okay. I just want to have a set of signals. I take them. I can manage them if I'm at the Starbucks. I can manage them if I'm on a plane, and it's simple to do. That's my goal. So overall, I found this to be amazing in terms of getting more high probability at bats. Okay. I always like to test this stuff out first before I start using it in the room. And now you'll know why I start taking kind of some new signals in the room. You may, it's like, oh, where do you get that? And so although I'm still on the lookout for home runs, I'm truly on the hunt for base hits. Okay. Now I started talking about lost profits. And so here's two examples of what I'm talking about here. This kind of made me mad. So the mid is the normal squeeze. Okay. Now don't get me wrong. I'm kind of being a little facetious here in terms of being mad, but so the mid here, we can see the normal squeeze. Okay. We had, over the course of 10 years on the Qs, we had 34 short signals, or 34 long signals, 29 short signals with an average move of $3.49. Okay. So 63 squeezes over 10 years, because I've been using the squeeze for 15 years. So an average move of $3.49. So if I'm trading an average of 10 option contracts at a time, that's $3,490 per trade. Now, on the improved settings, there was actually 94 at bats instead of just 63. Okay. And the average move was slightly bigger. Okay. 379 versus 349. So you had more at bats with bigger average moves. There was 52 longs, 42 shorts. That's 94 squeezes over 10 years with an average move of $3.79. Okay. That's 31 additional at bats. That's 31 additional squeezes I could have caught, or $117,000 in lost trading profits, trading 10 contracts at a time, because I simply didn't have those signals to trade. So I started thinking, the whole thing about compounding over time. It's like, are you kidding me? So then I wanted to get really nauseous and look at Amazon. So I looked at Amazon because I love trading Amazon. And like, all right, over the last 10 years, using the normal squeeze, okay, there were 66 squeezes over 10 years, all right? So you had 42 longs, 24 shorts, an average move of $75.68, all right? Now, if I'm trading 10 Delta 70 options, and then you get a move of $75.68, that's a move, if you're trading 10 contracts, of $52,000. Right? So, if the stock, if you got a Delta 70 option, if the stock is moving $75, then your option's moving about $52. On the improved setting, there was 108 squeezes. Okay. That's an additional 42 at bats. Now, this is where I get really, really upset, because those 42 at bats that I missed, had I been trading 10 contracts at a time, and I usually trade more than 10, and average move of $76, so Delta 70 options, $53,000. That's a lost profits of $2.2 million, simply because I didn't even know that the setup was there, right? So anyway, that's the stuff I started looking at, started blowing my mind, going, oh my God, had I had this over the last 10 years. And the other thing it taught me too is just being patient. Great. If there's not a specific signal, just wait, because guess what? There's going to be plenty of at-bats in the future, but you don't want to piss away your capital on mediocre setups while you're waiting for those fat pitches to come along. So that's what that is. All right. So what is this? Now, first of all, I just want to say the squeeze that we have right now, that's free on Thinkorswim, and that a lot of you guys already have, it's still perfectly fine. That's incorporated into this. If you got excited about this, as I did, I'm going to teach a class about this entire strategy that I've put together on this. The strategy class, I'm going to do this on June 1st. And the strategy class is going to go through exactly how to set up the arrows, how to time it, what markets, what time frames. All right. It'll include the Squeeze Pro indicator as well as the arrows. And if you're newer to options, you'll get an Options 101 course. And we're going to spend a Saturday going over this for about 4 to 5 hours, depending on questions. And the goal with that is you're going to walk out of this with a complete trading plan on how to use the Squeeze Pro with the buy and sell signals. You'll walk out of that with basically a blueprint of how to use it, and essentially whatever kind of market you want to trade. And again, this will be Saturday, June 1st. So not this Saturday, but what is that, like 9 days? And it'll be from 12 noon to about 4 p.m. Central. And then Eric will start at 11 a.m. just talking about the indicator. Now, just real quick here, and then I'll hang around and answer questions. The Pro version includes that early in and out indicator, which again is now improved and modified to trigger off the Squeeze Pro. It also includes 2 days of live trading. We'll do day trading and swing traders of stocks, options, and futures. And then the Elite package includes all of this plus the stats tool and an additional 3 days of live trading, so 5 days tool. So I kind of look at this as like, look, that is the complete package. Now, Good news, because I know a lot of you that took the small lot class had asked, like, look, John, I love this stuff, but if I'm trading a small account, it's hard to shell out $1,500 for this, even though it looks like a great investment. We've not done this before, but we did set this up where if you want to do a payment plan through PayPal, you can do that. And I think it's like 6 months or something like that. As it's sensitive to the fact that I know some of you guys are trading $1 million accounts and like this is nothing, and it's like, oh great, another tool. But I know that that's not everybody. So you can go through PayPal, do credit, and then you can do it over 6 months. So I just wanted to make sure that, if you had smaller accounts, you're like, dude, I can't, I want this, but my God, it's just a way to hopefully work that out. All right, so from there, let's go through this real quick. And by the way, this is the URL. If you go to simplertrading.com/system, it'll take you to the page where you can sign up. So Saturday, June 1st from 12 to 4 Central. And again, I will really want to emphasize here, this is not just about, hey, here's a new indicator, here's some money. It's going through and essentially coming out of this with an entire methodology and system backed by these tools, all right? So it takes a long time to put together a course like that. And when the time that's over, you're gonna have a blueprint. Essentially, I think it's a trading plan you can use for the rest of your life. So you'll have the updated squeeze, you're gonna have the arrows, all that kind of fun stuff. But more importantly, you're gonna have the strategy and the blueprint with which to use them. I mean, in my mind, this is a class that pays for itself 100 times over, 1,000 times over the course of your trading career. It also includes, if you're newer to options, because I certainly do options trading, and Options 101, because if you're newer to options, I don't want you to be intimidated. We're going to focus on the strategy class, basic buy calls, buy puts, but then during the live trading, we'll get into some more fun stuff where we're doing spreads and stuff like that as well. And then from here, the pro package, again, mostly the pro package is what's nice about this is that you do get the additional early in and out tool, but you also get 2 live trading days. I personally think the live trading days are critical because it's kind of like golf. If you've never played golf before and you're supposed to play with your boss on Monday, you can spend the weekend reading the 3 best golf books ever published, and that's all you do. And on Monday, when you go to tee off, you are going to be screwed. So you're going to have all theory with no hands-on experience, no hands-on practice. So in golfing, yeah, you read the book, but then you got to sit there and swing the club in front of a pro, so the pro can sit there and say, yeah, okay, look, you need to loosen your grip. No, you need to rotate back from your hips. It's the same thing in trading. When I learned to trade, I did not learn to trade reading books. I thought I was learning to trade reading books, but I got knowledge from reading books, but I didn't know how to apply that knowledge in a real life environment. Everything looks great in hindsight, but when I sat down with mentors and I watched them and got to ask them questions, that's when it sank in. That's when I started to essentially transfer that knowledge to myself. And so that's what I found too, is that, I used to think like, oh, just read a book. And there's some things like that. You got to have that practical application. And then of course the elite package is pretty much the whole ball of wax. So you'll get all the, you get the stats tool, and then it's all this. So I'm going to have to, sleep well that whole week, but there'll be 5 days of live trading. Okay. So anyway, when it comes to learning a new strategy or a new tool, it's best to dive in, get to know it intimately in a focused setting, so you don't have to experiment or cough. So you don't have to experiment with trial and error, which can cost you money. Because if you're playing around with it, make no mistake, if you're playing around with something in trading, it is going to cost you money. Trying to find out what works in trading costs you money. Okay, so this is the idea here, is like, look, here's the blueprint. It does take dedication to first learn how the system works and when to apply it in its various market conditions. All right, but I'm going to lay that for you out there on Saturday, June 1st. And I personally think it does require some real-time live market analysis. Now, the good news at the live trading is typically when we do live trading a one lot, we typically make enough during the class to actually pay for the class. Okay, that's just how it tends to work, because we're all very, very focused while we're doing it. One thing is that if a big question that pops up is, will the indicators work on my platform? So right now, we've got these tools for Thinkorswim or TradeStation. We are working on some internal charts as well. They're not quite ready yet, but I know because the common question is, hey, I'm in Canada, or I'm in Australia, or I can't get Thinkorswim. So we're trying to, or I've got Schwab and I don't want to switch, which, look, I don't blame you. So we're trying to incorporate that here into the near future. So, if you get the indicators, we'll obviously transfer them to that as well. Thinkorswim is pretty solid. If you use this link, you can get discounted commissions. You just have to, I think you fill it, you got to use this link to fill it out and then email them. If you have questions on that, just let them know and just say, I want, JC, John Carter, Simpler Trading, yada, 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 and just email that to support. So anyway, that's what we got. So here's the page. I'm happy to answer questions. Again, the link is simplertrading.com/system. I'm super excited about this. I think it's going to be a lot of fun. I think it's going to change a lot of lives. My mission in the markets is to prevent people the pain and suffering that I went through with that whole Minnesota house experience. And I know from painful experience that if people get in the right mindset with the right tools and the right setup, it will put them on that path and prevent all of that misery that comes from not exactly understanding or knowing, or knowing when to take action and when not to. And again, I would not put the stuff out here if I didn't believe in it, if I didn't use it myself. And so I look at it, I see stuff out there that's being sold for like $10,000. I think that's ridiculous. I just look at this as like, look, it's a small investment. It'll give you 100 times ROI or more over the course of your usefulness, or else it's not worth it for us to do it. So, okay, no, good question, Donald. Is it possible to be a successful swing trader in a news-driven market like we have now? Believe it or not, I do. I know it seems like a lot of the moves are drastic. It seems like a lot of the moves are out of the blue, but when you look at this stuff, okay, it gets pretty fascinating pretty quick how clean it is. If you look here at Amazon, here was this new squeeze setting up with a sell signal, right? If you look at the spiders, here's the interesting one here, is the S&Ps. So you got the S&Ps setting up here. There's a monster squeeze setting up here. I'm trying to see which way it's going to go. We had a little bit of a signal there. But then more importantly is when you're looking at markets like the bond market, because the bond markets drastically influence the stock market, you can see here you had a really nice, I guess I can actually see that a little bit better. You've had a really nice, squeeze that's set up here. Really nice buy signal, right? Boom. Really nice squeeze here, not the old one, and a really nice buy signal. So, and if the bond markets are going up, that's actually influencing a lot of the other stuff as well. So there's a lot of stuff like that where, again, yeah, there's going to be some noise back and forth, but by kind of having a system like that to follow, I think it just helps quite a bit. And then of course you can do intraday charts and stuff like that as well. Let's see. No, so what's interesting is with the stats is that the stats are based on which way it fires. So it'll classify it as short or long based on which way it fires. Yeah. Are the indicators available immediately after the class? Okay, so there's still a few. I know there's 2 additional things that Eric is adding, some things that we found to improve it, and also tweak the stuff on TradeStation. That pretzel is stuck. So I know they're not quite ready, but as soon as, for those that get it, you'll be first come, first served as soon as they're ready. Obviously, you're going to have it. You should be able to have it in time for a day or 2 before the class, and obviously you'll have it for the class. how do you break the payment up over 6 months? So Tony, I believe it's just equal payments over 6 months. And yeah, and I like that. Someone had told us like, hey, if you use PayPal, we could actually set up a payment plan. And I think it's, as far as I know, they don't do. I don't know exactly how they set it up, but we looked at it and we've talked to other people and said, yeah, it's a real smooth way to do it. Yeah, okay, there we go. Danielle's got some information there. All right. Will the June 1st be taped? Yes. So if you cannot attend it live, we will record it, and then you could watch the recording at your leisure. Yeah, I guess so yeah, so this will be on June 1st. And then the live trading, and of course the live trading will be during market hours. This will be June 5th and 6th, and then this will be June 11th, 12th. We'll take that Thursday off, and then we'll do the 14th. And I kind of like that because, you get some days, and then we have a day in between. You got to manage the trades, and we come back on the 14th. Nice. Okay, so yeah, so Danielle, just giving some information on the PayPal thing. It's 6 months, no interest, and you can pay whatever, a minimum payment. But if you can pay it off in 6 months, then there's no interest. So yeah, so that's great. So yeah, so 6 months, no interest, and yeah, that's awesome. Okay, so that's great. I didn't even know it was that. It's even better than I thought. That is pretty sweet. All right, so now I have to find where the room went. There we go. Is this an annual fee or a one-time fee? So great question. It is a one-time fee. I believe you could use the PayPal option for any of them. How well does it work for days like today? So on a day like today, you're most likely going to be looking at something, on an intraday chart, obviously. Let's see, what does the there? I typically, yeah, so for day trading and stuff like that, I typically prefer slightly larger time frames. So you can see, let's see, like on the S&Ps. So here was the S&Ps today. So you had a squeeze. Here's your sell signals. And then, hurry up, get in, sell, 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 sell. And then you did have a squeeze setting up here, and then we got a buy signal at the close. And you could drill down to smaller charts and stuff like that too. But that 30-minute to me is kind of nice because you don't get all the noise and all that kind of stuff. John, what about false regular and pro squeeze readings and resultant losses? So Terry, it's a good question. So the statistics just go back and say, okay, and you can go back obviously and visually over 10 years, look at them. But the statistics are based on when the squeeze actually fires. So I do have some settings that we'll talk about on Saturday the 1st, utilizing the arrows to help, a lot of time, most of the times they're pretty clean, but there are some ways to kind of weed out kind of false positives in the beginning. But obviously when the squeeze fires, it fires. A lot of the strategy is around easing into it before it fires. You can kind of get even that bigger bang for your buck. The nice thing about the statistics too is they only account for the move after the squeeze fired. Oftentimes when you're getting in before, you're actually capturing even more of that move. So does it keep you out of choppy markets? Well, so the idea with it is that, yeah, it doesn't, it only gives you signals when markets have built up enough energy to go. So if the markets have not built up enough energy, there's not going to be a squeeze. So it keeps you out of the crap. What's funny is that I used to, when I first started trading, I'd get obsessed with one stock, whatever it was. Google, I'm just going to trade Google. I made money on Google, so I'm going to trade Google all the time. I don't care about that anymore. I only care now is there a squeeze? I'm trading the setup, not the stock. All right. A lot of times people ask, are you trading Tesla? You're trading Tesla. You love Tesla. I'm like, there's not a good signal on it. So I actually love the squeeze. I don't care really. The underlying stock could be anything. Yeah, well, we've got all the exits set up on there. Yeah. So for the small lot stuff. So look, if you like the small lot stuff, I mean, we're using the regular squeeze with that, and that's totally fine to continue using that. I've seen this obviously enhance, and of course, I'll be using it too. So you'll get signals based on it as well, of course. And okay, I'm just scanning through the questions here. Yeah, David, squeeze in the MTF with pivots. That's pretty awesome. And oh yeah, let me write down the trading dates again too. So again, the dates are Saturday, June 1st, and that's 12 noon Central. Then you've got June 5th and 6th, and then June, oh gosh, I forgot now. Let me see. 11th, 12th, and 14th. 11th, 12th, 14th. And then keep in mind, the Elite package has the stats, early in and out, and that. So that's, if I got that together here. And then remember, you can do, again, if you're looking at this going, I got a small account, that's why we set up the PayPal. You can do 6-month, no interest payment plan, which I don't think we've actually done that before. And so I just thought that was pretty awesome. Okay, let's see here. Yeah, Alvin in Denver. So having a hard time finding setups on your own. Well, one of the things I'll do during the Saturday class too is kind of continue along the lines of, I mean, we'll certainly be setting up, looking at different things like, okay, how do you find this stuff, right? Right now, because right now it's like, okay, we got this cool indicator, but how do you find the trades? And it's nice, of course, because you'll be looking at it on stocks that you normally look at. But that's part of what we're also trying to build out too, is get that stuff ready. Yeah, well, and I can show you guys. So in the rooms and stuff like that, obviously, I've got, as I'm playing around with it, I can show it to you guys and stuff like that too. You'll notice that I did use the gray background. That's mostly because of that in and out tool. Kind of looks better on a gray background. I usually like to have a black background, but I haven't found it to be a problem. Oh yeah, no, totally goes with the Phoenix Finder as well. The nice thing about the squeeze, it's actually very complementary to almost anything else that you can do. TK, so we're working on incorporating this into the TOS scan as well. Yeah, well, so it's a good question. So sometimes there are big reversals without a squeeze. So like 10x bars are good for that, when they change momentum and stuff like that too. Yeah, no, I'll check on that, Michael, because yeah, I mean, it would obviously save a lot of time. Yeah, so good question. So remember, these are all together. So the Elite is basically everything. 5 days of trading, 5 days trading plus June 1. So remember, the Elite is basically, it's the Elite plus the Pro plus this. So somebody was asking, if I want all of them, do I got to buy all 3? You really don't. The Elite gets you everything. Will the scan cost extra when it's ready? No, if we build out any scans and TOS and stuff like that, we just give them to you. Yes, we will have this in TradeStation as well. And yep, and we do have Memorial Day coming up. Oh, does the Squeeze Pro Stats tool work in TradeStation? Yes. Let's see. Oh, sure. An intraday. Yeah. So here's intraday of Amazon. Of course, this will take away. So this is Amazon right now. So it looks like there was, a long signal here, short signal. This is a 30-minute chart. Triple short signal here, and you can see it eventually plummeted, right? Yeah, so I found it. It's actually, I mean, look, obviously I like trading Amazon and those kind of stocks too. So it's just a very clean way to set it up. Can the Squeeze Pro users have their own section at the next mentorship because we're special? Hey, here we go. We'll have the Squeeze Pro section. Well, the class includes setup instructions for TradeStation. Yes, so what we'll do on the 1st, just so you guys know, is that we'll have 11 a.m. Tool setup, and then 12 noon strategy will start. So that way you'll have an hour with Eric just to make sure and he'll go through TOS. And Eric, if you didn't know that, that's what you'll be doing Saturday at 11, and then going for Thinkorswim as well. Yes, so all the times I give are central, yes. Will all these tools be available for Thinkorswim? Yeah, so the charts I've been showing you, like this is Thinkorswim right here. So I've already got them on here, and we're still, this is a really cool squeeze right here on Amazon, and, obviously right there as well. And, it's just been solid, for lack of a better term. Central time is the cool time for sure. What's the difference between early in and out and pro stats? Okay, so good question. So if we look at this, early in and out is the bars, okay? So what this is telling you is like, hey, by the way, this is a sell signal in Amazon. When the bars turn green, that's telling you, it's giving you an early indication that the squeeze is about to fire, okay? And then also it will shift momentum. It gives you, when this turns yellow here, it's telling you, hey, momentum's about to shift. You might as well get out of your short because some short covering is fixing to happen. Okay, the stat is up here. Now, what this is telling you is on a 30-minute chart over the last 30 days, there have been 9 squeezes, 9 long squeezes, 8 short squeezes with an average move of $11. All right, that's on the 30-minute chart over 30 days. So what's nice about that is the stats tool is whatever time frame you put it on. So if you want to look at the monthly stats, you can do that. If you want to look at the weekly stats, you can do that. All you do is just switch the time frame. So Michael B he's like, man, such a great tool. How do you guys come up with this stuff? Here's the interesting thing about it. And I know this sounds kind of weird, but it's like new tools beget new tools. Because sometimes, and look, sometimes people say like, oh my God, another tool. And it's like, well, what happens, and literally new tools beget new tools, because what happens is that when you create a new tool, it opens up a different perspective of the market. And then you start trading the market with this new perspective. And you're like, oh, well, what about this? And so it kind of builds on each other because, I mean, trust me, if there's one day I wake up and it's like, there's no more ideas, I'm going to be happy with that because that means I don't have to, put together a class on it. But if it's one of those things where it's like, oh my God, this thing is so awesome, we have to get this out there. I mean, to me, that's fun. I mean, it's fun as long as it's fun. Let's see. Yeah, potential Otis. Yeah, no, it'd be nice. We'll set it up and see if like another big 30-minute trade. Yeah, and obviously, I mean, at the end of the day, I mean, the only reason we're here doing this is kind of like it's, I always joke. I mean, our life, when we're here, we're all traders, and our life would be easier if we just traded. But, first of all, the discipline that comes from, posting trades and creating this stuff, that actually creates a lot of discipline for ourselves. So that helps our own trading. But at the same time, I really, when that whole Minnesota house thing, that was devastating. I mean, I was throwing up. I was questioning myself. I was terrified to tell my fiance about it. In fact, I never did. I was talking about it at a talk like 10 years later, and she happened to be in the audience, and that was the first time she ever heard of it. She's like, what the hell? But that's how much emotional strife trading caused me. And I sit there and I go, God, it'd be amazing not to have, it's almost like easing people's suffering. They don't have to go through that same bullshit I had to go through. So, I mean, I don't know if that sounds corny or not, but I mean, part of it is it's kind of like, I mean, I don't know what, why else, I don't know what sometimes people ask, well, why do you do it? And I actually don't really have a good answer, but it's like, it seems like that's what I think about the most when it's like, man, if I had this, I wouldn't have to go through that suffering. So if other people have this, they won't have to do it either. So anyway, pretty cool. Yeah, now, and if you guys are doing like the annual small lot program, I mean, it's a good question. I mean, it's kind of like, I mean, obviously I'll be using these tools for signals. I would just say, if you are doing the annual one, and you are interested in some of the stuff, I think this is actually a good mix. But like I said, I'll be doing it. And if you're just following my signals, I'll just be sending them out. But at least that way, you can, because it does tie in pretty well together. Will I be able to receive the early bird pricing if I pay on Tuesday? Yeah. So what we'll do, guys, is that so what we're doing initially here is we're just talking like, this is kind of like, hey, if you're in our database or you're a member, over the next couple of days between now and like say Wednesday-ish, I think maybe even through Thursday. And then what we do is kind of like either it's the day of the class or whatever, then the early bird pricing goes away. So we just want to make sure that you guys have the opportunity, if you're interested in this, that you get the early bird pricing. Yeah, so part of what we'll talk about on Saturday is just the arrows, because there's different settings for them. And there's settings based on whether the momentum is above or below zero, or where it's ascending or descending. And so we're gonna spend some time going through that, because that's actually an important part of the strategy. Oh, Steve, great question. Is this class going to be online? Yes. So you do not have to hop on a plane. You do not have to make hotel reservations. You do not have to show up at our office, but we, believe it or not, we've had that happen before. We do this just like this. So from the comfort of your own home, you can tune in, you can record it. We'll record it for you, and you'll have access to it, obviously. And so we've just found it's way easier for everyone to do it online. If the poll is correct, I'm in. Yeah, it'll be interesting to see which way the S&Ps move tomorrow, right? I mean, you never know what's going to happen between now and the morning. Right now, they're up 10 points. So we shall see. We could buy some options here. After the class, can I access the recorded material? Yes. Yeah, it'll be recorded and in there so you can review it for sure. All right, guys. Well, most awesome. Well, let's do this. It is 8:30. We've been doing this for an hour and a half, and we're all going to be waking up early to trade. So let me just leave a few notes up here. And then, you know, obviously, if you guys have questions, you can call us, you can email us. Our email address is just support@simplertrading.com. And then, again, this will be Saturday, June 1st. And that's going to start at 11 a.m. Central, and then noon for the strategy. Then we'll have live trading on June 5th and 6th. And then if you're doing the Elite, there'll be more live trading on the 11th, 12th, and 14th. Remember, you can do PayPal payment plan. And then the link is right here. You just got to type that into your browser, and it'll take you to the page where there's obviously more details and stuff like that. I've seen a lot of questions like, I just want all the tools. So if you want all the tools, boom, 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 and boom. And that matches up with here, 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 and here. So you can do the Elite, and it's like the full 5 days of trading, the Saturday strategy, and then all the tools. Ben, I can see your chat. Oh, okay, Jan, we'll check on that. So yeah, the payment plan should be set up. So if there are questions on that, we can certainly double check on that. Oh yeah, no, pet lover, no worries. So the orange dots are like, they're like the super, I call them kind of the super power squeezes, because it's like the volatility has gotten so compressed. Like it's very rare to, those are rare, but when they happen, you just pay attention to them. Yep, Sam. So for the live trading, we will be doing day trading and swing trading. So for those of you that are there, you know, we'll do some trades that last a couple of hours. You know, I don't really scalp, but I certainly will do some day trading. We'll do futures, options. And then I'm also looking at stuff, assuming that some people are kind of working full time. Maybe they're taking some time off of the class. We'll be looking at daily and weeklies as well. I do a lot of trades. So yeah, you won't, there'll definitely be plenty to do. Yep, absolutely, Steve. Appreciate it. All right, guys. Well, thank you again. I'm going to leave this page up for anybody that has questions on kind of where to go or who to call. You guys have a fantastic evening. I'm really looking forward to working with you guys on June 1st, and then also getting the stuff and the tools and the strategy in your hands so you can start using it yourself. All right. You guys have a great night, and we'll see you on the other side.